Thank you for visiting Simple Investing Secrets. In this video, we'll go over our list of the top 20 dividend forever stocks to buy and hold. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. The best investment plans are those that prioritize passive income for long-term tax-paying investors. Even when the market isn't good for most stocks, strong long-term returns may be possible with investment portfolios that include reliable dividend stocks. Additionally, a company's ability to reliably pay a dividend and increase payouts year after year suggests that it has a stronger balance sheet and generates higher profits than businesses that don't pay dividends. One of the few investments that investors never get tired of is stable dividend stocks like ExxonMobil, Chevron Corporation, and AbbVie Incorporated. This is due to the fact that dividends account for more than 40% of a company's overall return. This trend, according to a book on dividend investing by Morgan Stanley, has been evident for more than 90 years, up until 2015. In the past, these stocks have outperformed comparable non-dividend stocks. According to recent data, from 1991 to 2015, dividend-paying stocks outperformed non-paying stocks. The average annual return for dividend-paying stocks was 9.7%, while the average annual return for non-dividend-paying stocks was 4.18%. Also, between 1991 and 2015, stocks that consistently raised their dividends every year did better than the S&P 500 in 17 of the 23 years. A report on the BlackRock Equity Dividend Fund from April of this year also showed that the dividend stocks in this fund did better than the S&P 500 over the 12 months that ended on April 30, 2022. A Barron's article from May 2022 said that between 1999 and 2019, dividend-paying companies with high payout ratios had an annual return of 10.9%, while companies with low payout ratios had an annual return of 6.6%. The companies on our list were chosen based on their strong dividend stocks and potential for long-term growth. Let's review our top 20 dividend forever stocks to buy and hold now. Number 20. J.P. Morgan Chase & Company, ticker, JPM. J.P. Morgan is one of the most dominant players in the financial sector. And thanks to massive operations and steady profits, it is definitely the kind of dividend stock you can buy and hold forever. JPM was the first major financial organization in the U.S. to eclipse its pre-crisis dividend levels. In 2008 it was paying $1.52 annually, and by the end of 2014 it had paid $1.56 per share. This megabank has weathered all manner of crises since its birth more than 220 years ago, and is the largest U.S. bank by assets today. For long-term investors, that's the kind of history that should give you confidence for the future. Number 19. Apple, ticker, APPL. Apple's stock is always easy to recommend and makes a great addition to almost any portfolio. For instance, while the Nasdaq 100 Technology Sector Index tumbled 40% in 2022, the iPhone maker proved its resilience by falling a more moderate 26.8%. Over the long term, Apple has provided huge gains to investors. The stock of the tech giant has increased by 233% since 2018 and by 837% since 2013. The strong results have coincided with a 5-year revenue growth of 130% to $394 billion and a 144% increase in operating income to $119 billion. It is hardly unexpected that Wall Street billionaire Warren Buffett allocated 41.3% of Berkshire Hathaway's portfolio to Apple shares given the company's steady and consistent development. In reality, Buffett increased Berkshire's investment in the company by $3 billion in the fourth quarter of 2022 as a result of the company's shares declining last year. Number 18. Abbott Laboratories, ticker, ABT. Abbott Laboratories is an American multinational medical devices and healthcare company with headquarters in the United States. The American medical equipment company has increased dividends over the last 5 years at an average yearly rate of 12.7%. The corporation has increased dividends continuously for 51 years. As of March 4, 2023, it had a 51 cents per share dividend payment and a dividend yield of 1.95%. Abbott Laboratories posted revenue of $10.1 billion for the fourth quarter of 2022, exceeding street projections by $410 million. On an organic basis, the company's sales increased by 5.4% from the previous year. Number 17. Target Corporation, ticker, TGT. Target Corporation is an American retail corporation, based in Minnesota. The company specializes in groceries and everyday essentials. In March 2023, analysts raised its price target on the stock to $200 with a buy rating on the shares, appreciating the company's recent quarterly earnings. They expect the company to show solid growth in the retail sector. Number 16. Microsoft Corporation, ticker, MSFT. It's hard to imagine the technology sector will look the same in 10 years, let alone 100 years. That makes picking a stock to own forever quite a challenge. Still, Microsoft seems to stand up. It's a $2 trillion powerhouse of unrivaled scale and is also one of the only US corporations with a AAA credit rating. On top of that, it has a staggering $100 billion hoard of cash on hand as of December 31st. If you're looking for long-term dividend growth, then there's incentive to buy and hold Microsoft for bigger paydays down the road. Number 15. Costco Wholesale Corporation, ticker, COST. Consumers can be fickle, especially over the long term, but Costco has defied the general cyclicality of retailers by building up an incredibly loyal and lucrative customer base. The cult of Kirkland products is real, with blogs and social media accounts dedicated to the best products under this Costco store brand, and the retailer regularly ranks near the top in customer satisfaction. From a more material perspective, Costco boasted more than $1 billion in membership fees in its fiscal first quarter that ended in November 2022. When you can rake in $1 billion every 90 days without selling a penny of product, you're definitely onto something. With a strong brand, thanks to high-quality discretionary items and bargain prices for household staples with strong baseline demand, this is one retailer that has staying power for the long haul, even in the age of e-commerce and changing tastes. Number 14. Blackstone Incorporated, ticker, BX. Blackstone is one of the biggest investment firms in the world, operating in many ways like a private equity fund. In addition to providing asset management services for clients, where it simply manages a portfolio of stocks and bonds for high net worth individuals, BX also invests capital in real estate, credit-focused opportunities and other hedge fund-like strategies. There's almost no corner of the financial sector that this $100 billion firm doesn't touch. Dividends are inconsistent, since profits ebb and flow based on performance, but they are always substantial. The last 4 payouts annualize to a yield that is almost 4 times that of the typical S&P 500 stock. Number 13. Johnson & Johnson, ticker, J&J. 3 excellent reasons exist for purchasing Johnson & Johnson at this time. First off, the stock is bucking the bear market, which indicates that investors see potential in J&J. The 2 other reasons are that J&J supports dividend growth and that the business will undergo a significant change in the upcoming year. Today J&J pays an annual dividend of $4.52, for a yield of 2.57%. That's a higher yield than the 2.07% approximate average for the pharmaceutical industry according to the New York University Stern School of Business. Now let's consider next year's big transition. J&J is spinning off its consumer health business into an entity called Kenvue. This is good news because consumer health is actually the smallest contributor to revenue and has the lowest growth among J&J's 3 businesses. Today J&J is trading for less than 20 times forward earnings estimates. This looks pretty reasonable considering its dividend increases and the new phase of earnings growth that lies ahead. And that's why now is the perfect time to get in on this story. Number 12. AT&T Incorporated, ticker, T. AT&T is a stock with staying power, and has increased its dividend each year for the last 36 consecutive years. This entrenched telecom has also streamlined its operations recently, spinning off its stake in Warner Bros. Discovery Incorporated to pay down debt and focus on the core business of telecom. Shares are roughly flat on the year, but have surged about 35% from their October lows as proof that Wall Street likes what it sees as we enter the new year. As a classic risk-off stock with a generous dividend and staying power, this is definitely the kind of income investment you want to buy and hold forever. Number 11. AbbVie Incorporated, ticker, ABBV. Spun out of parent company Abbott Laboratories, ABT, in 2013, ABBV took control of branded biopharmaceutical products to forge its own path without the stodgy and lower margin business of medical devices and consumer health products. Since then, ABBV has more than tripled to outperform the remaining ABT business. Thanks to a strong outlook, several industry publications predict ABBV will eclipse all other competitors to be the biggest pharmaceutical company in the next 5 years. With recession-proof drug sales and scale that's unmatched, it's hard to imagine a world without AbbVie in it. Number 10. McDonald's Corporation, ticker, MCD. McDonald's Corporation is a consumer discretionary company operating in the restaurant business. It operates and franchises McDonald's restaurants in the US and abroad. The company is based in Chicago, Illinois. In October 2022, McDonald's Corporation beat estimates in the third quarter and rallied in the market. The company's global comparable sales were up by 9.5%, compared to the 5.8% consensus estimate. U.S. comparable sales were also up by 6.1%. According to Valuantum analysts, a compound annual revenue growth rate of 6.2% can be expected from McDonald's Corporation during the next 5 years, which is a significantly higher figure than the company's 3-year historical compound annual growth rate of 3.4%. Bridgewater Associates was the largest stakeholder in McDonald's Corporation in the second quarter, holding 2.1 million shares, worth about $511.4 million. In total, 58 funds were long the stock with a total stake value of $2.7 billion. McDonald's Corporation, like ExxonMobil Corporation, Chevron Corporation and AbbVie Incorporated, are among the most reliable dividend stocks in the market today. McDonald's dividend yield as of November 2022 was 2.23%. Number 9. PepsiCo Incorporated, ticker, PEP. PepsiCo Incorporated is a consumer staples company that manufactures and distributes beverages and convenient foods across the globe. The company is based in Purchase, New York. Some of its products include dips, cheese-flavored snacks, and soft drinks under brands such as Pepsi and Quaker Foods. An overweight rating was reiterated on shares of PepsiCo Incorporated by Lauren Lieberman at Barclays on October 14. The analyst also raised her price target on the stock from $183 to $185. The company has raised its dividend consistently for the past 50 years and has a 5-year dividend growth rate of 7.39%. PepsiCo Incorporated also commented this October that it is hiking its EPS and revenue forecasts for the year by 2% each. Analysts have a consensus outlook for 7.3% annualized EPS growth for PepsiCo Incorporated over the next 3 to 5 years, based on the company's impressively stable EPS growth in recent years. Their total stake values were $4.9 billion and $4.6 billion, respectively. PepsiCo's dividend yield as of November 2022 was 2.53%. Number 8. Colgate-Palmolive Company, ticker, CL. Colgate-Palmolive Company is another consumer staples company on our list, operating through its oral, personal, and home care, and pet nutrition segments. The company offers products such as toothpaste, mouthwash, bar, liquid hand soaps, and more. It is based in New York City. Steve Powers at Deutsche Bank holds a buy rating on shares of Colgate-Palmolive Company as of October 17. The analyst also placed an $85 price target on the stock. Colgate-Palmolive Company is one of the most stable dividend stocks in the market today, having raised its yield for the past 59 years consistently. In October 2022, the company raised its organic sales growth guidance from 5% to 7%. Number 7. Home Depot Incorporated, ticker, HD. Home Depot Incorporated is a consumer discretionary company offering home improvement products. The company sells products such as building materials and lawn and garden products in its retail stores across the U.S. It is based in Atlanta, Georgia. Citi analyst Steven Zacconi holds a buy rating on the Home Depot Incorporated shares as of October 31. The analyst also placed a $340 price target on the stock. Home Depot Incorporated has been raising its dividend for the past 12 years in a row, making it a steady dividend-paying stock for income investors. The company's management team has also performed well in the current market environment, raising profits and revenues. Home Depot Incorporated had revenue of $82.7 billion in the first half of 2022, which represented a 5.2% increase compared to its revenue in 2021. The company also saw a 4.1% rise in comparable sales during this time. Number 6. Merck & Company Incorporated, ticker, MRK. Merck & Company Incorporated is a healthcare and pharmaceutical company operating worldwide. It offers human and animal health pharmaceutical products. The company is based in Kenilworth, New Jersey. In October of 2022, Morgan Stanley's Terrence Flynn reiterated an equal weight rating on Merck & Company Incorporated shares, and raised the price target on the stock from $91 to $100. Merck & Company Incorporated has raised its yield for the past 11 years without a break and has a 5-year dividend growth rate of 9.01%. At the start of 2022, the company offered strong guidance for 2022 with sales at $56.8 billion and earnings at $7.20 per share. Merck & Company sees its full-year sales between $58.5 billion and $59 billion. Merck's dividend yield as of November 2022 was 2.73%. Number 5. The Coca-Cola Company, ticker, KO. The Coca-Cola Company is a consumer staples company offering non-alcoholic beverages across the globe. It is based in Atlanta, Georgia. A buy rating was reiterated on the Coca-Cola Company shares in October 2022 by Peter Grom at UBS. The analyst also raised his price target on the stock from $63 to $68. The Coca-Cola Company is one of the top dividend payers today, having raised its dividend for the past 60 years consistently. It reported revenue growth of 11% for the third quarter, including a 4% growth in concentrate sales. Out of 895 hedge funds tracked in the second quarter, 64 funds were long the Coca-Cola Company. Their total stake value was $29.2 billion. Coke's dividend yield as of November 2022 was 2.94%. Number 4. Chevron Corporation, ticker, CVX. Chevron Corporation is an energy company engaged in conventional energy operations worldwide. The company is based in San Ramon, California. Charles Raihe, an analyst at Cowen, holds an outperform rating on Chevron Corporation shares as of October 31st. The analyst also raised his price target on the stock from $160 to $185. Chevron Corporation's dividend growth history shows consistent dividend increases over the past 34 years and a 5-year dividend growth rate of 5.33%. The company has been performing well relative to the S&P 500, with its shares rising 121.5% so far this year, compared to the S&P 500's 19.2% gain. Number 3. 3M Company, ticker, MMM. The 3M Company is a global conglomerate with operations in the manufacturing, healthcare, and consumer goods sectors. In the fourth quarter of 2022, the company reported revenue of $8.1 billion, which beat estimates by $10 million. Its cash position remained strong as its operating cash flow came in at $1.9 billion and it generated $1.7 billion in free cash flow. 3M Company has been raising its dividends consistently for the past 65 years. The company offers a quarterly dividend of $1.50 per share and has a dividend yield of 5.73% as of April 21st. During Q4, it returned $1.4 billion to shareholders via share repurchases and dividends, which makes it one of the best dividend stocks on our list. Number 2. Pfizer Incorporated, ticker, PFE. Pfizer Incorporated is a healthcare and pharmaceutical company selling biopharmaceutical products across the globe. The company is based in New York City. SVB Securities analyst David Risinger holds a market perform rating on Pfizer Incorporated alongside a $48 price target. The company has raised its dividend yield for the past 12 years consistently, making it a reliable dividend stock in the healthcare sector. Recently, Pfizer Incorporated also raised its 2022 earnings guidance to $34 billion, representing a $2 billion increase from the previous figure. It has also revised its revenue and adjusted EPS guidance to $99.5 billion to $102 billion compared to consensus estimates of $99.6 billion. Pfizer Incorporated was found among the 13F holdings of 79 hedge funds in the second quarter and 83 hedge funds in the previous quarter. Their total stake values were $4.1 billion and $5.1 billion, respectively. Pfizer's dividend yield as of November 2022 was 3.44%. Number 1. ExxonMobil Corporation, ticker, XOM. ExxonMobil Corporation, a Texas-based energy company, is at the top of our ranking of the best dividend stocks to buy and hold. The company pays a quarterly dividend of 91 cents per share and has increased its dividend steadily over the past 40 years. The dividend yield for the stock as of April 21st was 3.14%. At the end of Q4 2022, the number of hedge funds owning stakes in ExxonMobil Corporation grew to 79, from 75 a quarter earlier, according to Insider Monkey's Q4 data. These stakes have a collective value of over $7.1 billion. This concludes our list of the 20 best forever dividend stocks to buy and hold. Before putting your hard-earned money into buying stocks or investing in the market, you should always do your research. Which of these forever stocks would you consider adding to your investment portfolio? Let us know in the comments below. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.